Welcome to 2017. It is the first trading day of the year, and one of my favorite setups is forming. So that would be the Gartley pattern. Gartleys are often more art than science, but they do have specific numbers to be a textbook Gartley. So let's go through this one and see how she stacks up. So Gartleys are made up of two parts. The initial part is your X to A leg. That would be here to here. And what you're looking for is one, that it breaks a previous swing point, and two, that it's a large and sustained move. So if we take a look here, the previous swing point of 117, swing high of 117.80, and then price broke down and came all the way down to 116. So clearly broke, a large and sustained move. So that will be our initial X to A leg. And you'll notice price did retrace here up back to 116.70, but it broke down again, and so our termination point will be the lowest point of that initial leg. So to find our A to B leg, which is the second part of the Gartley, which would be an ABCD pattern, and the termination of the D is where our buy stop would be, and the reversal would potentially take place. So a couple things with this. The ABCD pattern, both AB and CD legs should be approximately the same in price and time. So we would like to see those line up, but once again, it's more art than science. So the first part, A to B, we throw in our Fibonacci tool, and we're looking for 618 for our initial retracement, which is right there. So that lines up pretty good. So that is 0.618 from there to there. The second leg, or third leg, pardon me, from B to C is, once again, we would throw on our Fibonacci tool, and we're looking for a retracement to 618 again, and that lines up perfectly. So the final leg, we would look for the termination of the D, and we find that by creating an area of confluence between three different numbers. So the first part, we take our ABCD pattern, we take our initial AB leg, and we just place it back on the C and find that level. So that appears to be 117.60. So we can get that out of the way. Now our next part, we would take our Fibonacci tool back to the X to A leg, and we are looking for this 786 level. And the final part, we take our Fibonacci tool from B to C, and we are looking for a Fibonacci extension of 127. So that is, if it moved down to C and retraced 100%, that would be here. 127% is up here. So we've created our often called a PRZ, potential reversal zone, order box, whatever you like. So let's just mark that nice. So in this area is where we would be looking to place our buy stop. You would generally be looking to place that as price is moving away from C, so probably around here you would have a pretty good idea where that's going. Since those two levels are this close to each other, I would probably have placed my buy stop right here, or you could be conservative and place your buy stop up here, but you also take the chance of missing the trade. We would, if we were trading this, we would place our stop above the initial swing point of X. And we could use a 1-to-1 risk reward. So if we placed our entry right there, that's 43 pips. Probably 117 even would probably work. So once again, drawing this, your X to A leg is the initial leg. You would like to see it break the previous swing point and be a large and substantial move. For your A to B, you're looking for a 618 retracement from your X to A leg, so it should retrace 61-62%. Your B to C leg should once again retrace around that 618 level. And finally, your three levels here are your Fibonacci extension of 127 of the B to C leg, a matching leg from your A to B, and finally a 786 retracement from your X to A leg. And that is pretty much a textbook Gartley. So we'll see what happens, and we will be back with an update here.